Thank you very much for coming to our event today. Maybe you can start off by introducing yourself and your organization.
Okay, well, I'm Peter Guest and I edit a magazine published by the Financial Times Group called This is Africa, which is a global publication which looks at the relationship that Africa has with the rest of the world. So looking at international investment, international policy, international development related to Africa.
And what is the state of business in Africa today? What are the interesting trends that you're seeing in the sectors that you're focusing on?
Well, one of the more interesting trends is, outside of what people normally expect that business in Africa is about, most people think of Africa and think of commodities. And commodities plays a huge role in terms of the economic growth, but not in terms of the GDP per capita growth. What really drives that segment, what drives individual development, individual wealth creation, is more in terms of consumer markets, and that's the small and medium-sized enterprise business. That's things like telecoms, that's selling scratch cards, that's creating entirely new products tailored just to those markets. And that's a really interesting segment. But that segment is currently quite challenged because for all of the talk we had maybe a couple of years ago about decoupling, about Africa and other frontier markets being completely decoupled from the Western world, and that's turned out not to be entirely true. Those companies need capital, they need growth capital, and those indirectly, the financial crisis has hit them because there's no capital through the banks, the African banks and the international banks to finance them. So they're facing a bit of a challenge at the moment.
And would you say that this is a sector, the SME sector, that also is the most inclusive of the business sectors in Africa? And how inclusive is it?
It can be seen as such. I mean, it's an entrepreneurial sector. It's a sector, it's a huge segment of the population, which is directly and indirectly employed by it. It does link into the multinational corporations, and often those SMEs are the supply chains of those multinational corporations. So the two sectors are completely divorced from each other. But as to inclusivity, well, yes, anyone can be an entrepreneur pretty much. You come up with the right solution and it can go to market.
Right. And what do you see as the constraints to local entrepreneurship or local SMEs? I know you've already mentioned capital and financing, but what are the other sort of structural constraints?
Infrastructure is a huge one, because the next step for most small enterprises, from, let's say, starting out in the capital or starting out in a second city, is expansion, and expansion outside of their immediate geography. If you're working in any kind of supply chain company, any company which needs things to move around, any company which needs to get fuel in, infrastructure is a colossal constraint. If you can't move goods around, if you can't, let's say you need refrigeration, if the power fails, that's a huge barrier to business. And beyond that, there's the regional integration angle, which is partly to do with infrastructure, but partly regulation and politics. Because if you serve a small market, let's say you serve a small Central African country with a population of 15, 20 million, you've got a colossal opportunity in markets that speak the same language, that are culturally relatively similar. But if you can't actually get to those markets because there are constraints in infrastructure and regulation, you can't expand to the full capacity. Great.
And what would you say policymakers, donors, and other individuals can do to support inclusive businesses in Africa?
Can they do? To some extent, it's to invest, to get involved in the sort of financing mechanisms that we're seeing through the African Development Fund or the African Development Bank, getting involved in private equity like organisations like FMO are doing, or CDC Group in Britain. What they do is, what they are able to do is invest counter-cyclically through tools, financing tools like private equity vehicles that can actually access the SMEs and provide direct financing, which replaces the gap that's been lost where the banks have gone, have disappeared. That's a big thing, but it's also quite difficult for them to do philosophically, because what you're essentially doing is investing like a private sector investor. But it's very effective.
Right. And in terms of double bottom line investors or alternative investors, is that market still large for investing in Africa, or is it still, in its nascent stages?
It's an interesting one. I mean, you've talked about portfolio investment. Right. So through in listed vehicles, it's challenging. I think last year saw colossal portfolio outflows, partly due to the fact that the stock markets there were simply illiquid and they were seen as very risky, probably were very risky. Partly because there was financing need at home. So if you want to cover a position in Britain, you pull out of your frontier markets. That's just basic strategy. In other vehicles, though, again, I mentioned private equity, that's not the case. It's still doing surprisingly well. Some of that is development financial institutions stepping into the gap, but they've actually been there for a number of years, so they were there before the financial crisis hit. But also private money is still coming in. Private money is using these vehicles because the returns are very good. What we've seen beyond Africa in the last 5, maybe even 10 years is a structural shift in the global economy. So growth hasn't been driven by the United States of America and Europe. The growth has been still driven by emerging markets. Now, China, India, Brazil, obviously main drivers of that. But other emerging markets have also seen growth. Africa's been growing uninterrupted for more than a decade. To access growth, you have to access those markets. People still see that. Now, some of them are still risk averse now. Some people, as soon as they see a financial problem, just buy T-bills, regardless of the fact that there's now such a thing as dollar risk again. But other people are looking 5 years hence and saying, well, where are we going to get growth in our portfolio? And at the moment, that's emerging frontier markets and Africa by extension.
Great. Well, that's a very positive note. Thank you very much for your time, and we're excited to have you here.